Even as inventory climbs each week, home prices are still very strong. The next few months of transition are going to be fascinating. Very hard actually to communicate. If the market is obviously slowing, how can we be hitting record high prices each week? One interpretation of these trends is that we're seeing the start of a negative cycle where buyer or sellers get scared and try to dump their homes. If you're the type who is bearish on the American consumer or who sees the American economy as like a house of cards ready to crumble, these early signs are probably exciting to you, confirming for a crisis that you maybe have seen brewing for a long time. I frankly see a much more moderate path over the next year. And we're trying to point out here the market signals as soon as they arise. The signs we see are clearly that the pandemic home buying frenzy has passed. Buyers will continue to have more options and less competition, fewer bidding wars, less often bidding over the list price. But man, it's hard to see home prices falling, at least in the next year. Home price appreciation will likely flatten. So if you bought in March of this year, for example, you probably won't have significant equity gains by next spring, but nothing more scary than that, really. Every week, Altos Research tracks every home for sale in the country. We analyze all the pricing, the supply and demand, all the changes in that data, and we make it available to you before you see it in the traditional channels. If you aren't using Altos market reports with your clients, your buyers and sellers, now might be the time to sign up. Go to altosresearch.com and book a free consult with our team because everyone is worried about what's happening right now. I'm Mike Simonsen. I'm the CEO of Altos Research. Here's what we're looking at for the week of May 30th, 2022. Available inventory grew quickly again this week to 364,000 single family homes on the market. That's up 5.7% from last week. 19,000 more homes on the market now. That's a little more than the model predicted for the week. But if you remember last week, we had much bigger growth of 26,000 more homes. Next week will include the holiday. So next Monday's data should have slightly smaller growth again. So maybe 370,000 inventory next week. So this is good. More inventory, but not a scary amount. Inventory growth is not accelerating or going parabolic or anything like that. And why would it? There's no catalyst for any big wave of new inventory. There's no distressed sellers. We have record few people in any stage of mortgage delinquency, and we have very strong employment. So what we have is slightly moderating demand, slightly fewer investors, and a bit more sellers. Each week makes a bit easier for the buyers who've been struggling for 2 years. And you can see the inventory buildup in our immediate sales tracker. This week, 25,000 homes went into contract essentially immediately after they were listed. That's 23% of all the new listings this week. The light colored portion of the line here is just a little bit fewer last week and fewer than last year. It's still a lot of homes with multiple offers selling quickly. It's a signal of slight cooling, but not by any means a sign of crash. I've been saying for 6 months or so that this immediate sales tracker would be where we see any slowdown sign first. A market with this many immediate sales is really a function of this frenzy that we've been in for the last 2 years. It has to come down. But it's hard to visualize the changes in this light colored bar here. So in this view, we have the percentage of the market selling immediately. So this is over the last year and this year. You can see last year's seasonal peak in March and April, and then through this year at the far right side of the chart here, each week for the last 6 weeks, we've had fewer and fewer immediate sales. This is a very clear trend right there at the right end of the chart. Now, we only started tracking this phenomenon last year, so I don't have a sense of exactly what normal levels of immediate sales are. There are always some, though. So maybe it's 5% or 10% of the market. We'll see where we end up. What it means, though, is that by July or August of this year, we're going to see some very surprised sellers. Sellers that overpriced and weren't well guided by their realtor. They didn't get the immediate sales offers that they were expecting. So you can use this chart as a frenzy tracker, how quickly we are coming out of the frenzy. And see that far end of the chart there, the right side, it's pretty clear how fewer and fewer each week. And look, we know that the demand is still there because prices are holding up. I expected prices to plateau about 440,000 this year, but it really looks like we're going to settle at about 450,000 for the summer. I suppose that's because 450K is a bigger psychological barrier, so prices tend to cluster around just under that. This week, 449,000 is the median price of a single-family home in the U.S. The price strength that we're measuring jibes with the anecdotal evidence that we're hearing from the boots on the ground realtors. 5 bidders, not 50, but 5 still means that houses are selling very often over asking price. The median price of the new listings is $430,000 this week, which is also strong. And it's a strong leading indicator of transactions that will happen in the future. That's the light-colored red line here. So remember that good selling agents now are informing their sellers that the homes which are priced properly will go into contract very quickly. Those that are overpriced are the ones that are at risk not to sell. So that advice shows up in the price of the new listings data, the light red line here. If sellers were witnessing, for example, true weakness in the market, they start setting their initial asking price just a little bit lower. But that change simply hasn't shown up in the data anywhere yet. That tells us that the sellers are still getting strong pricing for their homes. Though, to continue that trend, watching the price reductions is pretty exciting. So for the homes that are overpriced when they list, they have to take a price cut. This week, price reductions across the U.S. rose to 23.1% of the market. You can see this year's dark red line compared to the previous years. Normally, 30% of the market would have a price cut right now. This again shows us that plenty of homes are still moving very quickly because there's only 23% that need cuts. But the frenzy has passed, so we're rapidly returning to a much more normal pace of market. It looks like we're on a trajectory to maybe 35% of the market with price cuts by the fall. This is going to feel very, very slow and surprising to some of those sellers who were unprepared. It won't be actually slow, but it'll feel very slow. So again, when you're counseling your sellers, this is one way to communicate with them. Yes, the market is still very strong, and your price reductions are fewer than normal, but it's changing very quickly. And you can see how quickly the dark red line is climbing here compared to the other years. So set your proper price so we don't get behind this curve. If you need to have these conversations with your clients right now, go to altosresearch.com, sign up so that you can have your data in the hands of your potential sellers and buyers today. This is the Memorial Day holiday in the U.S. We'll have slightly fewer new listings this week. The market is changing quickly. though. So you can be sure we're going to do the data again next week with the latest. We'll see you then.